Good morning, traders and investors. Roger Scott here, still the senior strategist for The Trading Pub. Today is Monday. It's November 13th. November's almost behind us. We're gearing up towards Thanksgiving and Christmas holidays. Meanwhile, by the way, I made some adjustments to this room, added a couple of monitors. The video may look a little bit different. Matt and I were doing a bunch of work here, getting things geared up so that I could work effectively at home. Added a couple of monitors here, made everything great. Thank you, Matt, for helping me with that. Now, folks, let's get into all of this. Now, before I begin, I want to remind you, I have a VIP room at noon today, which is effectively the second part of this video after the market opens, and I also give you juicy trades. For the time being, it's still free. Don't miss out. It's happening at noon. You can find the link below this video. Also, if you want to get these videos early in the morning, and I know a lot of you do, subscribe to this YouTube channel. Just go to YouTube, go to Roger-Scott on the search bar, and you'll get to this channel. Hit the subscription button, and you'll be all set. And lastly, subscribe to my Telegram channel. If you haven't done so yet, you are missing out big time. I mean, big time. I'm not even going to get into all of that. It's too much to go with. Now, let's get into today's session. So you could see here, we are down about 8-9 points on the S&P, down about 38 points on the QQQ, down about 40 points on the Dow. This is very random. And it's also not that unusual after seeing what we did on Friday. You know, everybody expected Friday, including myself. I expected Friday to be a very quiet, dull day. And lo and behold, we cracked through the 100-day moving average with really good momentum, reasonable volume. Tech stocks rallied. Friday was not what I thought it was going to be. And that's one of the biggest problems that everyone has, even pro traders. We have to be in the now. We can't be in the, I think this is going to happen. I think this may happen. I think this will, if you anticipate too much, you will rule out potential scenarios that'll play out. I expected Friday to be a real dull, unimportant day, not a lot of market action. I was going to call it a half day. I shorted one stock just to see what would happen. And then the market ran away from us. So you got to be careful, and you got to be really careful around these points because there's a lot of volume on Friday coming into here, triggering a bunch of buy stops. The question is this going to hold, or is it going to undo itself? Now, a lot of chatter on the internet over the weekend said this was going to undo itself, but while this is ahead of the 100-day moving average, I'm bullish. Once it passes below the 100-day moving average, and if volume's low or if volume is heavy to the downside, I'll become bearish. But while this is trading above the 100-day moving average, we have to be bullish. If you look at the QQQ, you will see that it's now all the way near this area here. Now, remember what I told you, there's a lot of congestion here, and it's going to be very hard for the market to get through that. Today's going to be a big test of that. Are we going to just run up and get away from this, or are we going to consolidate into this and fall back down? We're above all the major averages. We're in a very bullish period right now with the market. But again, we have this consolidation, we have this congestion here, we have a lot of overhead resistance, as we like to say it in the technical language. So you got to be really careful around these levels right now. Looking at the Dow, I think the Dow is lagging behind the most. The Dow is right at the 100-day moving average. So today's going to be a very interesting day because if there's going to be some buying pressure, and their volume is going to be pretty strong today in light of everything I've seen, it's going to be a really interesting day. Now, what will make this even more interesting? I'm glad you asked. We've got earnings this week on retail. Retail is one of the biggest aspects of the economy. Today, you've got Tower Semiconductor, Tyson Foods, Monday.com, Genuine Sports, nothing really big. But tomorrow, you've got Home Depot. That's big. You also have on Wednesday, Cisco. That's a pretty big stock. And you also have Advanced Auto Parts, you've got JD, you've got PanW, that's a pretty big stock. You've got Target. Very important. On Thursday, you've got Walmart. So Tuesday and Wednesday, you've got Walmart, Target. Tuesday, you've got Home Depot. So between Tuesday and Thursday, you've got a lot of retail stocks. You've got also Applied Material, you've got Bath & Body Works, so Macy's, a Ross Store, Gap, a lot of retailers. So we have to be very careful this week because it's going to be a doozy. And when we're looking here at our sectors, right here, let's just really quickly look at this here. Retail. Let's look at retail. Let's see how it's been doing. Looks like it's kind of looks like it could be coming up. Several down days, not following the market. So far on a retail basis, retail is below Russell 2000, and healthcare and energy, they're not doing all that great. Last week, retail, same here, all the way at the bottom, not doing all that well. Tech is, but not retail. Over the last 6 weeks, retail is also down here. So retail hasn't been doing so well. So this report is going to be a very, very important report. And also, on top of the earnings, you've got CPI and PPI. And you all know the CPI and the PPI is two things the Fed looks at tremendously. You also have retail sales. You've also got Philadelphia. You've got a lot of stuff. Therefore, I think today the market's going to be trading on technicals because nobody wants to get ahead of this number. This could be a real big number. Also, if you look at TLT, which only rose about 49 ticks on Friday and hit the 50-day moving average, it's now trading below it once again. And this puts pressure on the market. And if this starts trading below the 8-day EMA, and I think it will today, we're going to see some problems with the market, and the market taking back a lot of the profit from Friday's session. So you're gonna have to be really careful. You've got CPI, PPI, retail sales, petroleum status report, jobless claims, which isn't going to be a big one, and housing starts. And then you have a bunch of Fed speakers, and most importantly, you still have retail earnings on the table. Let's talk a little bit about the broad market, and I'll get back into technicals. So this is bearish, and I think this came out after the market closed on Friday. Moody's lowered the U.S. credit ratings outlook. That's bad. While investors look ahead for the release of U.S. inflation data, that's CPI, and high-profile retailers like Macy's, Target, Home Depot, and so forth. Moody's, that's funny. Let's change their name to Moody's. Moody's lowered its assessment of U.S. credit outlook from stable to negative on Friday, citing very large fiscal deficit, like $1 trillion credit card deficit. I mean, come on. Partisan gridlock on Washington, that's going to be impactful. I don't think it's going to amount to anything, but it'll put some pressure on the market. They expect the U.S. fiscal deficit will remain very large, significantly weaker debt affordability, which means junk bonds gaining attention. Friday's session, blue chips posted a 7-week high. Nasdaq posted an 8-week high, 2-month high. Things were really rocking and rolling on Friday. That's probably because a bunch of algos hit a bunch of stops at the 100-day moving average, and I warned you that was going to happen. Data on Friday showed that University of Michigan consumer sentiment fell to a 6-month low. Boy, oh boy, oh boy, the market really embracing this technical bounce. Inflation unexpectedly rose to a 7-month high. 5-year inflation rose to a 12-year high. Folks, this rally could fade. San Francisco Federal President Daly said Friday, central banks might consider raising its benchmark lending rate again if progress on inflation stalls, while the economy continues to surge. I agree with her. If inflation continues to move sideways and labor market and GDP growth remains solid or strong, well, then we'll probably have to raise again. They are in a wait-and-see mode. They're being honest with you right now. They're not being as squirrely as they were a year ago. Bostic said policymakers can bring U.S. inflation back to their target without the necessities of further interest rate increases. I think he's just full of it. I think that that Dolly's more realistic. I think we will get to our 2% target without us having to do anything more. I think you're going to regret saying that, Bostic, and I'll remind you of it. I have I have like an elephant memory. In January, there's now a 25% chance of a rate hike. I don't think anything's going to happen in December. I think the Fed's going to want to see if we're going to have a rally, because if the market's stronger, they'll have more flexibility and less pissed off consumers. As I mentioned, you've got Tyson Foods, Home Depot, Cisco, TJ Maxx, I forgot to mention that one, Pan W, Target, Walmart, Applied Materials. Now, these are not FANG stocks, but these are really important stocks, and they shape our economy, and they'll have a lot of influence over the market this week. You also have CPI data, you have PPI, you have core PPI data. You've got import price index, initial jobless claims. You have a lot of data, a lot of Fed data. Europe giving us a little tailwinds, tracking Friday's gains on Wall Street while investors geared up for a series of data released throughout the week to clarify on the economic outlook. A lot of data this week. China, close hires, optimism about summit between leaders of the world's two largest economies later this week overshadowed lingering concerns about Chinese economy. Hopefully Biden will take some caffeine pills and won't fall asleep. Yeah, I said it. This Biden, he's Don't get me started. Japan's index closed above its flat line, giving up earlier gains as investors booked profits around the 33,000 level. Data showed on Monday that Japan's wholesale inflation decelerated below 1% for the first time in 2.5 years. Meanwhile, the yen fell to a fresh 2023 low against the dollar, sparking concerns about potential interventions by authorities to support the currency. I hope their prime minister pays attention and listens and does something. He's an American economist. He should know better than having negative interest rates this long. But again, what the hell do I know, right? Looking at the stock market, and we have to look at this very carefully. We were pinched. Yes, we were pinched in between the 100-day and the 50-day line. We finally broke out. We're slightly higher. I wouldn't be surprised if we broke down today a little bit and erased half of the gains just so we can have a little shakeability ahead of tomorrow and expect some volatility. If you look at the major sectors, which we will right now, technology, man, technology. There's definitely money coming into technology. There's definitely money coming into chips. There's definitely money coming into QQQ. There's definitely money coming into communication. I prefer technology and semiconductor because they're already near the top. Now, S&P 500 is at a very interesting point right now. It could rally back here and it can come right back down. The next 2 days will be very important, very important. Utilities look like they've had it. I mean, look at this, down days. Financials look pretty strong here. Consumer discretionary, which is a lot of retail, isn't picking up the slack. Real estate is not picking up the slack. Industrial's looking pretty strong, but I'd be careful with stocks like UPS and airline stocks. They haven't been doing all that great. Consumer staples is still holding water. Basic materials are not. Retailers, they're not doing good at all. That's economy right there, folks. If retailers don't do well, transports don't do well, because what are transports transporting? Retail. Healthcare is not doing all that great. So they made lower lows. So we have to be careful. There's definitely money coming in, or at least Friday was coming into tech and semiconductors and all aspects of the tech sector, which we are not really seeing across the board. Be very, 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 very careful. Let me just show you here. Be very careful the first hour today. Let the markets show its hand, and be very careful here. Let me show you QQQ. Be really, really careful. Really careful right here, because we are literally right at this level. Looks like we broke above this level, but we still have this bar here. So we need to break above 380.49 on the QQQ. If we don't break above that level, no soup for us. And then we have a lot of overhead resistance up here as well. So we got a level right here at 384, and then we have the high at 388. But I'm going to ride these techs as long as we can, and I'm going to fade using other type of stocks to the downside. Don't expect a lot from retail sales, and I'll keep you updated throughout the day. Now, before I let you go, if not, it's not often. It really isn't often that I learn something new about trading. But this week, I had a pleasure of hearing about a pre-market trading strategy from arguably the #1 world's pre-market trader. It's based around the candlestick pattern, and it flashes around 7 a.m. I'm looking at it right now, Eastern, each trading day. Now, this pattern, it often precedes the market's most aggressive daily moves. Now, I understand that sounds a little bit wacky, but at the same candlestick pattern tipped this expert off to the dot-com crash and even the great financial crisis. And this week he promises to teach just a handful of us how to trade it at 7 a.m. each week. The event is free. There's no cost. Click below. Check it out. Do it right now. And if you have any questions, roger@rogerscott.com. I'll talk to you guys soon. Have a great week, and you can always count on Uncle Roger for his morning video. Subscribe to our Telegram channel, like our YouTube channel, and I'll see you in the VIP room. Bye.